The second part of your learning unit 7 touches on the ledger accounts in a job costing system. Right, just before delving into the ledger accounts, I would like to look at the spoilage as you're gonna be reading this section. One thing to understand is that there would be what we call a normal spoilage, and then there will be an abnormal spoilage. Obviously, the normal spoilage is taken into account already, but what is abnormal? So if we assume, as per example 7.5, 2.5% is the normal spoilage. What was required to be completed was 5,000 units. Within those 5,000 units, 2.5 of 1,000 units is 125. So that spoilage, if you look at the calculation below, that spoilage was taken into account. So it's part of what we call the normal spoilage. But if we find out that there was 175 units of total spoilage, that would mean that there is 50 units of abnormal spoilage, meaning that 50 units that goes above the estimated normal spoilage. Right, so as you can see, the calculations are below. This is quite straightforward. Let's now delve into the ledger account in a job costing system. And these accounts, which I will name quite quickly: material control account, work in process account. Work in process account obviously should ring a bell. Material control account, if you remember the previous ledgers that we covered, we did cover on direct material ledger account. So that should also ring a bell. Finished goods should ring a bell. Labor control account should ring a bell. I think it's just instead of direct labor, it's labor account, control account. That makes it more, more controlling, if I can put it that way. So it's to bring the control part where as to what comes in and what goes out, right? Factory overhead control account and cost of sale. Eventually, you would remember this small sketch that I've done here, but this crisscrossing, and that's the expression I used in our last recording. I was talking about this specific crisscrossing, but what it means is simple. It's just you need to understand this as a flow, and like I said, direct material, direct labor, manufacturing overhead would feed into the work in process. The work in process, once those products have been completed, they will move into the finished goods account. And once they move from the finished goods account, we will need to look at the cost of sale, right? Because it's not the cost of production, it is the cost of sales, right? Cost of sales and not cost of production. Meaning there are products that will be finished, completed, that will be in the finished goods account, but that will not be sold in the end, okay? I think we did touch on that example where we had 100 units that were completed, but only 95 of those units were sold. So this should be understandable. I think you would agree with me. It's time for an example. So example 7.6 SIA Zama toolmaking operates a job costing system and keeps a set of books to record all their building projects. And that's what it's all about, folks. It's about how do we record these costs within the different accounts, so that we keep a tight record of the cost, right? So here is an example. First thing that you and I would be interested in by now is, what are those projects? What are those production departments? And so the first table here offers us a picture already of what's going on quickly. So there is no waste of time. We can see that there is South Coast project, there is the North Coast project, and there is the Midlands project, right? And we have our three musketeers waiting for us there. Direct material, direct labor, manufacturing overhead. This gives us quite a good picture, right? And a semblance of a total cost there for the different projects. So the balances at 1st March, if it's at the beginning, that tells you already, and it's a balance, it's an opening balance, that tells you already that we would need to take into account opening balances, right? For direct material, we would need to take into account opening balances, direct labor, or when we talk about the work in process, we would need to take into account direct material opening balance, direct labor opening balance, manufacturing overheads opening balance. Right. So this total is quite useful when we're going to look at this first account. So we're going to jump straight into the work in process account, right? So for example, for South Coast, so the work in process for the South Coast project, if you look at the balance on the 1st of March, what you see is that total of direct material, direct labor, manufacturing overhead, which totals 1,560. And that is there, right? Requisition for material issued during March. At the beginning of March, we had an opening balance, but what happened within March now is provided to us. Okay, we're very interested to see that. That would be section B. South Coast project, there is an amount there. North Coast project, what are we talking about? We're talking about material, right? Material. So for the South Coast, if you look again at our work in progress, I'm trying to select South Coast project, work in process, South Coast project, material control, we have the 720. Okay, so that was the requisition. So meaning that was the transaction that happened, what we acquired. So that this is the material that went into the actual production for the South Coast, in March, 720. The same thing that we're doing for South Coast applies for the work in process for North Coast project, for Midland project, and for the municipality project. All right. But one thing to remember is that of those that had opening balances, the 3 first project, the municipality project, if we're looking at the direct labor, the municipality project did not have an opening balance, right? The municipality project. One thing you would also look at is the manufacturing overhead for March. It is provided to us section D, subsection or subsection D, whatever it is, manufacturing overhead for March were 4,500 paid by EFT. So one thing that should draw my attention and yours, obviously, is what about the manufacturing? What about the absorption rate? That should draw your attention, right? And he tells us manufacturing overhead are absorbed at a rate of 15 Rand per direct labor hour. So it does make sense now. It does make sense. The fact that it is the direct labor hour that is the basis for the allocation, all right? So, but which is good. So let's keep that in mind. That 15 Rand per direct labor hour will be so important to provide all our overheads, because we're just going to look at the hours, the direct labor hours, multiplied by the rate that was provided to us, which will provide us all the overhead, all the actual overhead for March, for South Coast project, North Coast project, Midlands project, municipal project. A bit of just a bit of a twist of tongue there. So let's go again and look at the South Coast project. Section F. We are told that it was completed and it was sold for 18,000, as well as the Midlands project, which was sold for 65,000. This is important because we will understand that for these two projects, when we are dealing with the finished goods, we understand that these two projects were completed and they were sold. But we would know that the municipal project was not completed. For example, if you look at section H, the municipal project was not completed. So it is incomplete. All right, so it's still work in process. So remember these things. Remember these things. Every line means something. The North Coast project was completed, but has not been sold yet. That's good. So we understand that when we're going to be looking, actually, why not? Let just go straight to the finished good. So when we're going to be looking at the finished good, we're going to be looking at the finished goods on our left-hand side, depending on how you're looking at it, left-hand side. Okay, you would have your work in process for the South Coast, the work in process for the North Coast, and the work in process for the Midlands. Why? Because these were the ones were completed. They were completed. Granted, they were not sold. That's why on the other side, for the cost of goods sold, we are not going to take into account North Coast. That 3,120 belonging to North Coast work in process will not be taken into account. And that's why it is excluded on one side of the ledger. It is excluded, it's put as a balance there below the total or after the total, because it's something that would be later on set aside, excluded, right? It will be excluded because the cost of goods sold, if you look at a cost of goods sold, it's exactly what it does there. It excludes the amount for the work in process of North Coast because it was not sold. It was completed, but it was not sold. It was completed, meaning that in the total of all that were completed, there is that 66,000. So all of the three are added together for 66,720. But when it comes to the other side of the ledger, it is excluded. And there is a reason why it is being excluded, because of the fact that it was not sold. Okay, so I trust that that's clear there. If you're looking at wherever cost, where it come from, how it relates, you have all the arrows to show you where the cost is coming from and how it relates, right? So that was for the finished good ledger as we touch on it. But let's again just the work in process. Let's do a clear example for the South Coast project. If you look at the South Coast project, we did agree that there was a balance, an initial balance or an opening balance of 1,560, right? And if you remember, we look at the requisition that were done in March for the South Coast project. It was 720, which we add. For the wages or the direct labor, obviously we had to look at the direct labor. So when you're looking at section C, this tells you what the direct labor rent value is. It tells you the hours, but it also tells you the rent value. So when you need to look at the wages control or direct labor, you look at South Coast project, it's 900 rand, and we take that into account. For the manufacturing overhead, we will have to take the 15 rand per direct labor hour that was provided to us as an absorption rate. That helps us for what? For the purpose of finding the overhead. The overhead is not direct. It's very much indirect. That's why we use another method to determine. So we have an absorption rate multiplied by the 60 hours of direct labor hours, right? 60 hours. When you're looking at C, there is 60 hours. So we multiply 15 times 60, which gives us another 900. So manufacturing overhead is 900. That's how we get the total, all right? And on the other side of the work in process, there is the finished good, right? Work in process. So whatever we're finishing in the work in process must go into the finished good. And that's why those two accounts there balance each other. So what came from the work in process, we're expecting that it's going to be finished goods, right? So the same was done for the other project. For the North Coast project, for the Midlands project, it was done. For the municipality project, or the municipal project, you just need to remember that we did not have an opening, but we had material control, we had wage control, we had also manufacturing overhead. So all that is tallied up and added, and we get. But if you look well, there's a balance there. These are just something that you need to note. That instead of saying finished good, it says balance. Why? Because the last project, the municipal project, was not completed. So we can't allocate that to the finished goods because it was not completed. So making sense there. So we had all our work in process accounts. That's the reason why we went to the finished good, because when you're looking at the finished good, on your right hand side you had the finished good. When you're looking at your right hand side finished good, the total there for every finished good which came from the work in process was transported into the finished goods control account. So on that ledger, we had the work in process of the 3 projects that were transported there, right? But like we said, we did talk about the cost of goods sold. Obviously, you do understand why we did not, we do not add the municipal project, because there is no finished good, it was not completed. And also you understand why we had to take away from the cost of goods sold the amount for the work in process of the North Coast, because it was completed but not sold. I hope that I take enough time and speak enough and calmly in this section so that you understand, right? But there is also another account that we need to look at that is quite interesting, which is the manufacturing overhead, right? The manufacturing overhead as such by itself, it's quite important to do that account, because remember, it's an account we had to calculate, right? It was not given, we had to calculate it, right? So when you're looking at the manufacturing of overhead, on the side of the work in process, you have all the amounts that we calculated. 900 for staff cost, 450. Remember, we were doing that 15 rand, which is the absorption rate. We were multiplying it by the hours of each project. That's all. So remember, that's what gives us all those work in process there. So when you're looking on your right hand side for the manufacturing overhead ledger, you can see that we have these work in process there. They are there, sitting there. All right. But what we need to see is that what did we receive? What was the amount? What was the manufacturing overhead for March? What was it allocated? What was the remember that these, I repeat again, there is budgeting that is taking place. We are using this method of absorption rate in order for us to budget ahead of time. We budget ahead of time. A company might have a particular rate that it is using in order to budget. But we did say that there is a difference with what actually happens, right? And so for the manufacturing overhead for March, there was a 4,500, right? That was there. So that on our left-hand side of the manufacturing overhead, we need to put it there, and we need to balance the accounts, right? There was a 4,400, but we did not have 4,400. In fact, we had 1,800 not there. So that means that there was an under allocation somehow, okay? Or cost of goods that were sold, right? Or cost of goods that were sold. So that amount of 1,800 is quite important. It's going to help us into the cost of goods sold. Because, like I said, it was very important. The point I made way above here, saying that if something is not, remember the finished good, when I was touching on the finished good, I say all the work that needs to be performed, if they are completed, we are talking about a finished good, right? So when we come back here, so we are saying that for the manufacturing overhead, we have what is in process, but we have also what we cannot account for. So if we cannot account for it, it means that it was completed and probably it was sold. I think that's a very good point for you to keep. So that's why we do a balance between the manufacturing overhead that we have in our account for the month. We have an amount of 4,500 that was paid by EFT for the manufacturing overhead. But when we're looking at what is in process, we could only account for 4,500 minus 4,500 minus all the overhead. If you add up all the overheads together, the difference is 1,800. So we consider that as a cost of goods that was sold, right? We consider to be a cost of good that was sold. And this cost of good that was sold, when we're looking at the final, the cost of goods sold ledger account, you can see we have the finished goods, right? Remember the finished goods account gave us the cost of goods sold as well. So that came from the finished goods ledger account. So that's why it still reads finished goods, but we understand that it is, in other words, cost of goods sold. It's that 63,600, right? 63,600. It's there, we have it. But we need also to add what we consider from the manufacturing overhead. We consider that there was a cost of goods sold of 1,800. So adding up the two together will give us this amount, this total cost of goods sold of 65,400. So that's the total cost of the goods sold. Right. So with that, we are in a good position to look now at the sales itself. We are told that the SAF project was completed and sold. That's what we are told. It was completed and it was sold. It was completed and it was sold. We have also the Midland project that was sold for 65,000. So we have these two projects that were completed and sold. When you're looking at the sales, we have the 18,000 and the 65,000 for those two projects, South Coast and the Midland project that were completed and sold. So the total will be 83,000. We're going to minus the cost of goods sold that we just calculated, which will give us the gross profit. So just to make sure again, for the manufacturing overhead, you are clearly understood what I meant. I meant that 4,500, when you're looking at the manufacturing overhead ledger, that 4,500 is what we paid. We paid it out by EFT, right? For manufacturing overhead. It's quite clear, if we paid out that amount, and we cannot account for that amount within the material or within the indirect material or the indirect labor or any overheads for the manufacturing, we cannot account it in the work in process. It is not there in the work in process. There we can safely assume that that money, that amount belongs to what is already sold. Because when we go into the work of process account, we cannot account for that difference. And if it's not in the work in process, we can safely assume that it can be attributed to cost of goods that is already sold. So I trust if just go back again through this recording, I've captured faithfully what the meaning of this is. I trust I've captured faithfully this. So go back again through the recording and hear that this is what I mean by we paid out money. When we check into the working process, we cannot account for the difference. Where is that difference? We can safely assume that if it is not, it cannot be accounted for the work in process inputs, or it is not in work in process, we can safely assume that that money would be therefore attributed to the cost of goods that is already sold. Right. So from here on, this gives you a very good picture of these ledgers. Remember the flow again. When you're practicing, remember this flow. It's quite important. These will be a nightmare and will be very confusing if you are not following a particular flow. If you are following a particular flow, even if a particular thing will get over your head, you will be able to trace. Okay, you'll be able to trace. Right. So we've done what we were asked to do. We were asked to look at the working process of this project, the manufacturing overhead, the finished good control, and as well as the cost of goods sold. So from here on, you just going to have examples. So for example, for example, no, this particular question, 7.5, if you look at 7.5, they give you the known and the unknowns, right? There's numbers that are given to you. Perhaps you will encounter this in your exam where they give you ledgers. They give you some are given. For example, here we can see the balance is given, but we don't see the others, right? For material control, we don't see the others. So, and here is the solution. Obviously, in yellow, I've highlighted for you the what should be the answer. So you can practice this to see if you are getting these numbers in yellow, which are the unknown, right? So you can practice, take a particular example, practice it, and see if you get the right examples later on when you check your answers, right? So the same I've done for question 6.7, straightforward, a very small answer there for question 7.7. The table is there. Look again at what is given to you. What are they asking you? Please remember the question. I repeat that you are not being asked to memorize things and just go to the exam and just write whatever you need to write. No. We are saying, look also at the question. Perhaps sometimes you don't need to draw a table. And so it's dependent on the question that they are asking you. All right? So calculate the cost of jobs completed. You have about, for this question 7.7, you have about 1, 2, 3, 4. Four jobs there, and there you can see them 1, 2, 3, 4. The same thing we've been doing, right? Question 7.8. Look at the jobs there. They are 1, 2, 3, and that's exactly what 7.8 answer is about. It's about completing this, right? Here specifically they're asking you for 7.8. The question asks you to a statement of comprehensive income, which would be so simply just the sales minus cost of sales. We've done so much the statement of comprehensive income, or statement of income statement, sorry, in other words, income statement, with sales, cost of sales, which gives us and basically whatever is in cost of sales there is you need to look at opening inventory. You add the purchases, less the indirect material, less the closing inventory, because you need to minus the closing inventory, right? For the material, what is the direct labor? What is the overhead? The three musketeers are there. When you are evaluating the cost of sales, the three musketeers are there. Material, direct labor, manufacturing overhead. Direct material, direct labor, manufacturing overhead. I can't repeat this enough. Direct material, direct labor, manufacturing overhead. All right? So it is there. You can basically look at this question and figure out what's going on here, right? Less the closing inventory of the work in process, which will provide you the gross profit. So question 7.8, very important for you to practice this one. Specifically this one should be as well practiced. And then we go to the last question, 7.9, and that would be it. All right, so we can close here to say that in this learning unit, you are introduced to the various types of costing systems with particular focus on the job costing system. You learned about the following: the steps involved in job costing, calculating overhead application rates, calculate the selling price and cost of a job, calculating the cost of work in process in job costing, calculating the gross profit of a job, completing a job cost card, if you remember the job cost card, calculating the spoilage in a job, drawing up the ledger account of a job costing system. Right. So wishing you all the best with the practice of this learning unit. Feel free to send me any question or anything that troubles you or is difficult. We can do it together and move along.